because OPEC did not change its supply strategy, which is why oil reached that high. And of course, global markets is centering on the unemployment figures later this week. We've got the Fed's tapering plan coming up next month. Well, we don't know where to finish. Pete McGuire from XM is going to run through that and more. Hi there, Pete. Happy Wednesday. We'll kick off quickly with oil. I guess it was all the rage yesterday because OPEC decided not to release more barrels, but this isn't just a brief trading event, is it?
No, good afternoon, Annette. It certainly isn't. That 400,000, I think it was already factored into the market. And the other side of it, of course, is that increasing from a demand picture. So I think they're going to have their hands full. They've also got to consider the inflation story and what's happening globally. So, yeah, OPEC, it's going to be interesting how it plays into November. And by then, we could be nearly at $85 or higher a barrel. I can't believe what we've experienced over the last, say, 6 weeks. It's just been onward and upward, and it's been a great time to be long crude.
It sure has, because remember we started this year with, for example, the Fed saying inflation is transitory, and yet there's all these factors feeding in to make it seem like anything but transitory.
Absolutely, that's so true. And I think what they also, which is gaining traction at the moment, Annette, which is that slight terminology or slight stagflation story. So yeah, I don't know whether it's transitory. I think from the consumer's point of view, unless you're seeing big wage rises, then you're not going to experience anything other than inflation at the food store and the petrol pump and everything else, utilities. That's what I think the Australian consumers are certainly feeling, and very much across Eurozone and into the UK. So that whole picture is really creating, I think a lot of angst for the consumer land, and how 22 plays is going to be a fascinating year. New Zealand just hit the rates up at about 0.25, so maybe they're the starter, and everything moves up forward from here.
Well, it's certainly stress testing the central banks, because as you know, it's not just oil. We have coal going through the roof, and so if you can't pay the coal bill, you can't keep the lights on.
No, exactly right. That's so true. And, as we know, the size of the coal market, I was just looking at some numbers, it's nothing short of extraordinary. When you're thinking about something like India, and I know China's numbers are just, they control the coal market as far as consumption, but that real big global picture still, coal-fired power plants, the whole storyline there, and we're addicted to electricity naturally, and we're addicted to at the moment, regardless of what everyone says, to coal and coal engine and coal firing. So the story is going to be, again, how does that play out over the next decade or two and meet, targets and so on. So I'm not sure what the answer is. It's going to be a hard one, but I know there's a lot of people that need electricity across the world. And I think the growing consumption is just extraordinary.
I was speaking to an Indian investment strategist yesterday, and he was saying expect rolling blackouts in China. As you say, I think they're 80% fueled by coal. Does this put a bit of a damper on the outlook when some of the two biggest economies are struggling with an energy crisis?
Well, exactly right. So there you think about it. And I think India's down to about 3 days worth of supply at the moment, Annette. They're a big producer, as we know, but they need to import. So there's the problem. And what happened across pretty much the world due to the pandemic was under investment from a Capex mindset. So I think we're all paying the price now. And again, how does it play over this Northern Hemisphere winter period? And we know that, it gets frightfully cold across China. I've been in Beijing in January, -5, not unusual. So let's just hope that there's enough electricity and enough, power to heat both of those nations.
And let's bring it closer to home. You dropped it earlier. Yes, the Kiwi have doubled their official cash rate, if you want to be cheeky about it, from 25 to 50. Whereas yesterday, the RBA reminds us yet again, they're not moving. Does that make trading Aussie Kiwi interesting, or it's just all priced in?
I think it does make it interesting, and I think it's just over the next, say, week or so, I wouldn't be surprised to see a bit of movement there. The storyline coming across the Aussies, pretty much range bound. But I think that there could be a dollar to be made on that Kiwi cross. Let's just see again the appetite as far as traders and what they believe can happen. And I can't let too much out of the bag, and I'm not here to give advice, but I think that there will be an appetite there for that particular cross, and certainly look at the other markets, maybe Kiwi versus Euro, Kiwi naturally against US dollar. So the 24 hours a day it's open, Annette, and it doesn't go to sleep until Saturday morning our time.
That's exactly right. Well, get some sleep until then, Pete. Thanks for joining us from XM.
Thank you, Annette.